A mixed picture to start the week on Wall Street. Tech stocks were the standout as Tesla got a boost from a report that the Trump administration is looking to relax self-driving rules. But the broader rally after the election fizzling out, raising the question whether there's more room to run. Joining us now is Phil Orlando, Federated Hermes Chief Market Strategist. Phil, it is good to see you. So maybe, Phil, we'll start the setup this week. Relatively light economic calendar, but big earnings on deck with NVIDIA. Just taking a step back, Phil, I'm interested to get your take. What did you make of the earnings season we just got through here, Phil? Your big takeaways, and what are your expectations for corporate profit growth as we head into 2025?
So the earnings season's been pretty good. We're, probably 85 or 90% of the way through. The expectations going into the third quarter is that revenues and earnings would be up maybe about 4.5% or so year on year. And we've done better. Revenues up about 5.5%, earnings up about 6.5%. So I think in that sense, it's been a success, but not quite as strong as the second quarter where earnings, for example, were up about 11% or so. Now, as we look out longer term, one of the things we've got to consider is that there's a new sheriff in town, and that starting in January of next year, we will have a new government. And the fact that there is a red wave with the potential for some significant tax changes by the end of calendar 25, which is the extension and permanence of the 2017 tax cuts, has significant implications for us later in the cycle. So it'll probably take a year or two for all of that to work through. But our thinking is that as we get into calendar 27, we could be looking at earnings of $350 on the S&P 500. Putting an appropriate multiple on that, that would give us a target price in calendar 26 of about 7,500. Discounting that back to calendar 25, then that would suggest a target price next year of about 7,000, and discounting it back to this year, that would give you a target price of about 6,200. The S&P was at about the 6,000 level, last week. So we've got a little bit more juice to the upside. But the point is that the rally that the markets enjoyed from, let's call it early to mid-August into the election, or a week past the election, appears to be justified based upon the expectations of stronger economic growth.
Phil, really interesting there, and sort of in line with some of the other bulls that we've been talking about on the market, not just for this year, but for next year. Ed Yardeni, for example, has a 7,000 target for the end of next year. And your point about tax policy is well taken. What about all the other stuff, though? And all of those sort of cross currents that the market is now trying to puzzle through, that we really won't know the answer to, not a month from now, not on January 20th even, likely either, but things that are going to play out over the next year.
Well, it's a fair point. There's a lot that we don't know. The president-elect is in the process of trying to put together his cabinet. As you know, Julie, you've been doing this a long time, like I have, that personnel is policy. And to a significant degree, the individuals who take some of the key jobs, like Treasury, for example, that's going to dictate what is the administration going to propose in terms of tax policy. Now, the one positive we know from the Republican standpoint is that we know that the Senate and the House will have modest Republican majorities. So if they're able to keep their coalitions together, then we have the potential to get some positive tax policy. But to your point, some of the one-offs that we were hearing during the campaign, no taxes on tips, no taxes on Social Security, no taxes or the deduction of interest payments on cars. I don't know if any or all of that sort of stuff is going to make it through the legislation. What we're hoping to see is that the cut in corporate tax rates from 36% in 2017 to 21% currently, we're hopeful that stays in place, and we're hopeful that there's an extension and a permanence of the individual tax cuts and possibly some improvement on the SALT deductions. For those of us that live in in high tax states, getting that increase from 10,000, say, to 20 or 30,000 means significantly that we've got the ability to save more, invest more, spend more, and ultimately that's good for the markets and the economy.